Hi, everyone. It's Monday, and it's that time of the week for another episode of Just Shilling. I'm super excited to have another great guest today. And before we do get into it, everyone, just wanted to let you know that nothing we discuss here is going to ever be considered to be financial advice. This is a safe space. Anything that is probably a little bit too spicy or controversial for a average family dinner, we will not be bringing those topics up here today, but really looking forward to this conversation. And all of the things that we discussed today are opinions of our own and do not necessarily represent our respective organizations. So, without further ado, I'd like to welcome Edwin to the stage. Long time coming here, Edwin. Welcome,
Yeah,
welcome. Happy Monday. Will you just take, I would say, 30 seconds to a minute to tell our audience a little bit about who you are and what you're all about? And then we'll get back to the beginning of how this journey all started for you.
absolutely. So thank you very much for having me here. Pleasure. My name is Edwin Mata. I'm the CEO and co-founder of Brickken. Brickken itself is a tokenization platform. We're a SaaS that allows companies to be able to digitize and tokenize any financial instruments or real world assets. So excited to be here to discuss, whatever you guys want to do. Just quick background. I am a lawyer by default, so hopefully I don't make things too complex because you know how we like to roll.
Well, tell us a little bit about that. So, a lawyer that's transitioned into working in blockchain and of all things, tokenization. So, where did your journey begin, and what was that time that you can recall the fascination began in, specifically even tokenization of all things?
Yeah, so in 2018, I was working for a company that was in the electronic signature sector, so a competitor of DocuSign, just to put you in perspective. And they got a European grant for trying to research the application of blockchain for electronic signatures, contracts, identity. I mean, we're talking about very early stages as to comprehending the full scope of tokenization of blockchain. Sorry, and one of the fellow actually people that got hired to do the blockchain project is now my co-founder. He is actually our head of blockchain. And in 2017, 18, we were just researching what applicability could happen to like what we're doing, which was full contract, so full legality. Like that was kind of like, can we execute certain clauses on chain to verify that the immutability between parties stays correct? There's no like people changing later what happened or not. So it was a very much research, but I always said it in all my interviews, like I stumbled upon oracles because I needed to know how to grab off chain data and bring it online to act like an auditor or something. I really didn't understand a lot. So I'm talking about like Google search, oracles, chain link, white paper, and I was like, I'm gonna read this. And for me, that was a game changer because I was like, this is very interesting. Like you
Yeah.
can verify data real time, 24/7, valuations, fluctuations. And I started going down the rabbit hole and I started reading more. And I was like, okay, so blockchain is a whole new infrastructure from the ones we're deciding or we're using that is freely entry, real time, 24/7, public ledgers. Because I come from M&A, so the whole transaction between assets and everything is very messy because people own the data, and here we're talking about freely accessible information at all times. So that kind of just started. I went down the rabbit hole, and 7 years I'm here. Like I didn't went back.
You're here, you're here. And can we go back to the early days of when you were trying to create this company and maybe just share a little bit with the audience what those early days were like and maybe how your train of thought or your mindset has changed from those humble beginnings to now obviously having a well-functioning business and getting significant capital and raising money and really moving forward. So just bring us up to speed what your thoughts are on that.
Yeah, so idealization was one of the things that when you start as an entrepreneur, you fall in love with your first idea. And and also it happened because first when we started talking about tokenization, we thought about like the real estate. There were some projects in 2017 trying or 18 trying to tokenize real estate, and we wanted to pursue like that model because we thought about like that democratization. Right now, a lot of people talk about lowering barriers for the retail. Like that is true still, but the more we went into finding product market fit and understanding what are the pains, not just for real estate, for other companies, because we started like getting a lot of feedback from different entities, blockchain people, non-tech savvy, tech savvy. So since blockchain it was quite new, like the inputs of information were like, okay, there's so many paths. What is the path that is going to take us to really succeed as a startup? So from the beginning, where we loved the democratization sector, we went into understanding that there's more behind that. There's like a lot of variables of optimization between how you send capital, how you deploy back dividends. Doing it through bank infrastructure can be very costly. Doing it on chain can be one to one. So the more we started understanding the blockchain and how it connects to other ecosystems, the DeFi play and everything, like nowadays I would say that like we enter for real estate and we enter in capital markets just because the journey completely switches. And obviously this also meant some of the fellow founders who were at that real estate idealization are no longer with us, so we had to switch even the teams and everything. So for us it has been an ongoing journey, and it's just because blockchain is still very new. There's not a lot of information and there's a lot of research still to be done. So we are mutating as the industry itself is accepting us, but also us pushing product into the market.
Yeah. And speaking about education, you just brought that up. That's something I would love to explore a little bit. How do you really kind of balance educating the general public about the benefits of tokenization while still kind of addressing some of the skepticism that comes along with it?
I think through education you can nurture like the skepticism to be far off, because right now on everything that we do on blockchain, not just us, like there's other people's writing about it, some for the good or the bad, but the real people building should be the one educating and writing more, because if not it just becomes like a marketing trend. Like we in Brickken have done humongous work for people to understand that it's not just about real estate, like it's about financial instruments, equity, debt, bonds, profit sharing, all of these things that form capital markets, the things that can be tokenized. I by extent, real estate is just 1% of everything that can be tokenizable. What I'm trying to say here is that that is the research that we have been doing for so long. So it is the duty of the builder in these new ecosystems to write and inform. Because if not, the market, the marketing, like the news outlets, everything will only glimpse the 1%, and they will stay at, oh, it's only for real estate. And it's like, no, like 1% of everything is the possibility. So education is how you sparse away skepticism and you start building on top of that. And then nowadays, tokenization has really evolved from the first understanding that only real estate was the only applicable layer.
Yeah, and I think that maybe that's the first maybe understanding or maybe belief of the capability when it comes to tokenization is that it's real estate only. So beyond real estate and art, that's another popular one that people usually associate with tokenization. Which asset class do you think is really poised for the biggest disruption through tokenization in the next few years here?
Yeah, I think that as a whatever. So this is where we're gonna go into why real estate or art is just the up. Because for example, the thing here about tokenizing is it's a form of capitalization, right? So you secure capital from investors and you put them into a new machine, which is tokenization, that allows you to obtain the capital faster, but also start communicating with them in a linear way. Deployment of the interest, deployment of information, and all of that. So debt is still one of the most valuable financial instruments that we have there in capital markets. Companies tend to use either capital increase, so startups use that a lot, selling equity to capitalize. But a lot of companies that are profitable, especially this is why real estate makes a lot of sense, they issue debt or bonds. Countries issue bonds to finance themselves. So if we think that that instrument can be fully on chain, that means that the company buying the art could issue debt on chain to capitalize itself, buy the piece of art, then flip or whatever they want to do, and the earnings be distributed back. If the company wants to build a new, I don't know, a new building of 7 floors and they need 1 million, that company can issue the debt on chain, raise the capital, and pay the interest to the lenders, and then give back the maturity rate. So it is through that, like we understand that if we understand that the financial instrument of the underlying asset, the art, the real estate, the restaurant, the hotel, it don't matter. That means that truly everything in this world can be tokenized because the asset class is not the relevant. It's the underlying financial instrument that allows the company to capitalize itself through the which they get connected to the real world asset. So that is why, for me, when we ask what is the next asset class, I think it's everything. It's debt. What is the company looking money for, and what is the investor looking to invest in to generate income? If it's art because some sector find it profitable, it is. If it's real estate, or if it's startups, or if it's whatever it is, as long as there's offer and demand and they match, then there's a tokenization applicable to that situation.
Hmm. And I've been hearing too, rumors and chattering about potentially, tokenizing stock markets and things like that, right? So, from your opinion and being someone that's worked with this and really done a lot of research on the numerous use cases. Are there any things that you feel should not be tokenized? A lot of people say that anything can be tokenized, but do you feel that there are just some things right now that maybe we don't need to go down that path, or that it's just not necessarily the technology hasn't caught up to the actual use case yet?
Yeah, so you said it very well. I don't think this current stock market needs to be tokenized. There's already a system in place that allows buyers and sellers to enter into that stock market. It's a different technology. So things you don't have to put everything on chain. I think like the new stocks could have in the future a decision to go through a legacy system or through an on-chain system. The
Hmm.
stock markets that they're going to start using tokenized stock are being built. Here in Europe, we only have right now one with a license out of Germany, so it's an ongoing process. So tokenizing something that already runs efficiently and has a process, such as the Nasdaq, you don't need to bring the Nasdaq stock on chain because it's like they already have Robinhood. I'm not chilling for Robinhood, but it's kind of like the conception. There's already a system where people can jump in. It's like, oh, but it's not tradable 24/7. Yeah, but if you that's wrong because you have brokers that can actually trade 24/7 by making that request preemptively before the market opens. So it is in theory 24/7. The thing is, the new assets or the new equity that decides to go through the tokenized version will have its own market, its own place, and those will not go to the Nasdaq. So there's a rumor happening that BlackRock is trying to build the Nasdaq of tokenized version out of Texas. And it's not that they're going to be connected, they're two different systems. One goes through a legacy system of brokerage, placement agents, a lot of intermediaries to do an IPO. And the other one goes through a tokenized version, which is theoretically speaking and actually practically from a technology more optimized. So what I'm trying to say here is it is true that everything has to be tokenized, but something that works, don't bring it on chain. This is a new system. Just make sure that it makes sense for that new system, but not overplay and bring Apple stock. That is like, oh, I tokenize Apple stock. For what? Like, what is the purpose?
Yeah, I think everything has to have a purpose to it and not just going out and doing it just because it can be done necessarily. And as tokenization becomes more mainstream, what role, and you were alluding to this a little bit, what role do you kind of think that the government's going to play in regulating this technology? And what have you seen so far, especially in the European area? And how do you really kind of see regulations evolving in the future?
I think the regulators have been been hiding for a long time before
Mm,
they actually went into legislation. So here is a conception that it's everything in this world, every action has a applicable regulation to it, right? There's not a thing that is like, oh, there's no law, because then the judge will say like that's impossible. Either I apply by analogy something, or something very similar I have to apply, and this is good because uncertainty creates the gray areas, but also regulators don't fall in the trap that they overregulated or they regulated something entirely wrong that led to a lot of misconceptions. So I think blockchain being so like drastic in changes as to how data flows, who's the owner, like the miners, do they pay tax on the mining? There were so many questions at the beginning that they decided not to regulate because they didn't have the know-how and they didn't want to establish some certain terms. So when Micah came in, they were already making, for example, in Europe, which is now in other countries trying to regulate. United States already have the digital asset potential regulation and everything. Is because now they have certain clearance that whatever happens, now there's a specialized law for a certain use case, and that's better for us because if they preemptively, with a little know-how in the market, embedded into the regulator, maybe chances are they would have misregulated and establishing, for example, all utilities are securities. Because back in 2017, there was a very trending know-how that they were trying to say like cryptocurrencies acted as a security because there was a thought of profit in the future and whatnot. So it was through know-how that they waited a long years before they were like, no, this is a new asset class, and that benefits us all because now we know that Bitcoin, Ethereum, and all those are not securities; they're commodities. And what I'm trying to say here is regulators obviously need to understand the know-how, get with the technology, have conversations with the people building, and it is through that conversion of know-hows, them as an entity protecting the interests of the town, of the country, and the fellow citizens, and the builder trying to create something entirely new. When they match, then something positive can happen, which is regulations start getting enacted and markets start thriving on the building of these new technologies. So regulators are essential, and I think in many countries they're doing good, regardless of the marketing saying they're over regulating. Yeah, but in reality, they set up the path for the new builders to understand how to make something.
Hmm, that makes a lot of sense. Now, can you just give us a basic understanding of how something is actually tokenized on chain? And maybe just give us a very basic step-by-step process for
Yeah.
how you guys do that, and what's the methodology behind using a particular blockchain versus one or the other.
Yeah, actually, that's a great question. I think tokenization right now is very ethereal. Nobody knows how it works, right? Like it's a perfect question that we get. It's like, so how do I do it? And the process itself, it's more simple than people think because it's literally creating the token or the representation of the financial instrument. This is kind of like jumping into a dashboard, establishing what are the financial terms. I'm issuing 1 million to with a minimum ticket of this, and I want investors from here. So you decide what is your chronogram as if you were doing it off chain. And this is the most important thing. When you tokenize, like the good platforms, they don't talk about blockchain. Blockchain is the backend. I'm capturing what you need, how do you need, and then everything in the back being shoot with your decisions. So instead, in a normal way, where you tell your broker or your legal firm or Nasdaq, hey, I'm doing all of this, and they do it for you. Here is you become self-sufficient to establish. I want this for these kind of investors in this geography, and I'm gonna sell it through this. So we guide you through the whole process, which is generating the financial instrument, so creating the debt or the equity, then allowing you to have a portal where you can invite investors. So it's like, okay, now I created that. I'm gonna let you have approach to third parties. So you create your, in our case here, standalone website where you have all the details of the investment opportunity. So you can send that to potential investors. They go in, they have all the information, can download reports, can download everything because it's a, hey, I'm inviting you to invest. Please invest in me. And the investor has to be, how, why would I invest in you? Sell me. What is your sales pitch? So we allow you to create that. And then the investor jumps in and then start can pass a KYC in some cases if they want or not, and they can start generating the investment opportunity. So they start deploying capital, and that capital is obtained by the issuer, and now you switch that potential investor into shareholders or lenders, and we give you what happens next. It's like, okay, now you have this, and we give you different forms of communication and all that. So in reality, tokenization is just one massive investor relation management. Kind of like if you have Salesforce for sales, Hotspot for marketing, tokenization is the new trend for investors. We give you all the functionalities that you have to consider when you capitalize from third parties, from the creation of the potential investment to the onboarding of the investors to what happens afterwards, which is the management of the investors. So tokenization is in reality one big investor relation management system.
And it's very fascinating technology, but there's still going to have to be that human hands-on approach. For example, I mean, if you're trying to tokenize a piece of art, I'm sure that like a Sotheby's or someone there is going to validate that the original art piece is what's being tokenized. So there's still that kind of interaction with just the old and the new, correct?
Absolutely. But that happens without chain. Like there's gotta be a trust, and trust is built because you already trust me as a person. It's like, okay, you look trustworthy when I'm gonna invest. Others will say like, I want to invest in that if you give me like like an accounting firm validating that the in this case the art is true. So you want a curator to come in and establish if the painter is from who they say they are and everything. So the matter of the trust level, it depends between the issuer and the investor. So
Mm,
even though you have on-chain things, you should never forget the trust in certain objects, except meme coins, which is gambling, and we know that. But in other sectors, is if you say you own the Picasso, proof of ownership. I wanted somebody reviewing the Picasso, so the issuer should already generate those documents, and when the investor jumps in, it's like, I'm not telling you that I own the Picasso. Here is all the documents, trust the whatever. And if you want to invest, this is the path. Instead of doing it through the legacy systems of bank transfer, everything, we can do it the tokenized way. And in the end, for your answer, it's like, it really don't matter if you're on chain, on paper, in person, the level of trust that you want to provide to your investor should be provided regardless of the technology level under which you are requesting the investment.
mm. And it's exciting, and I think that tokenization is no doubt disruptive. Um, what do you think is the most significant challenge that you're facing right now in getting businesses to be more open-minded and adopt this new technology?
I think I think a lot. There's a lot of information out there as to why tokenization is thriving. We've seen a boom since Securitize BlackRock created the Build, the money market fund last year in March 2024. And I think the market itself started analyzing more in detail as to what is tokenization, right? Because I'm putting this as a big event because before companies will come in and they will literally say like, yeah, I heard about tokenization. What is tokenization? So it was like, mate, this is a sales call. Like I'm like, just come with a little know-how. We can do the rest. But it was very hard. Some of the sales calls that we had because they came from zero as a, oh, I heard about this, or I heard it's free money, and it's like, why? Because it's in crypto, and it's like there was a lot of misunderstandings. Let's call it.
Mm,
Lately, we feel like clients are more qualified. They understand in concept what is tokenization, which is 50% more when they have no concept as to what is tokenization. So I think now, since there's more information in the market or ChatGPT, I don't care where you get your information, but you come with information, uh, is making it more simpler. And I think companies now understand that it's a form of you generating capital. It's a capital deployment form. Now, towards the misconception, there's still a big misconception that when you issue the token on chain, people automatically go and buy. Like they forget the work of you requesting money, being on chain or not, but you still have to convince investors to jump into the opportunity. Just for throwing an opportunity out in the market does not mean that you're going to generate investors. So there's a misconception from some potential people trying to use tokenization by the fact that what they read in crypto is like, oh, this meme, yeah, 1 billion, they won. And it's like, it's a different thing, different asset class, different investors. You are in real estate. You have to request and convince the investors that your opportunity is going to create them and generate a new source of income. And you have to still play by the same rules. Technology does not alter the asset. Whatever you're doing, you still have to treat the asset as it is always been treated. Real estate for real estate investors, right? For art, for those kind of clubs, cultural and whatever. Like it's super important they understand that the technology does not alter the investment opportunity because people who invest in art will still invest in art. You just uh, making it simpler for them to invest in those asset class, but don't expect a meme coin holder to suddenly jump and invest in a Picasso. I don't think that would work.
Hmm. And in your opinion, what would you say is a really exciting opportunity that tokenization can unlock for the everyday person that really just has no maybe access to traditional markets or even an understanding of investments in the basic level?
Yeah, so I mean, when they say like democratization, it is true to an extent because it opens new opportunities. Like if I wanted to invest, for example, I'm from Mexico, right? And south of Mexico, they're doing a lot of real estate, hotels, all that Rivera Maya, just because it's beautiful. There's a lot of opportunities, but those real estate guys, if I don't bring my 50K ticket, they don't want to talk to me because they rather have small tickets just because they don't know how to manage or they don't know how to receive from abroad money. There's a lot of bureaucracy that they got stuck in their head that does not allow them to think. It's like, why don't I open the opportunity by lowering the ticket to foreign people, which is what tokenization does. So what I'm trying to say is in the near future, these opportunities are going to be open. And that is beautiful because somebody who's very good in real estate maybe can divide that 50K ticket into 50 different opportunities, reduce the risk, but also have more taste because I'm in Spain. But like I said, the Mexican thing, what about they open a crazy new resort in Thailand, 5 stars, and that hotel is trying to build on a tokenized version, and the minimum ticket is 1,000. Through tokenization, I can have now in my portfolio something in Mexico, something in Thailand, something in Spain. So opportunities start arising, and my decision making becomes without an intermediary. I deal directly with the issuer of the debt or the whatever term, and I'm also more connected, but also I get more investment opportunities, so my portfolio starts getting bigger. Nowadays, that I don't know how you would do it.
Hmm. Changing gears a little bit, and I wanted to hear your thoughts on this because there's so many different even subsections, if you will, of tokenization in the use cases. But when it comes to things like tokenized equity and debt, this is really something I think an area that's growing. So what trends really do you kind of see emerging in these specific areas that could transform how companies are able to fundraise and just manage capital?
Yeah. So you always have to follow the money, right? That's a big statement that we always say in even in crypto. We're like follow the money. If we take a look into what is happening from big institutions jumping into tokenization, we should understand the magnitude of what is being built on chain, right? So it's not only the BlackRock with the build. I think Franklin Templeton, like 3 weeks ago, deployed his new marketing market fund on Stellar. Uh, Vanguard, Fidelity, all are testing. But those are the big asset managers. If we look into other types of, for example, banks, there's other banks establishing that tokenization of their assets can be more efficient when they start onboarding different investment classes and whatnot. So banks are doing proof of concepts of tokenization. So now we can go to another financial layer. The other day we had a client of a fund raising for investment in tokenized assets. So we have a tokenized fund looking into exposure of tokenized assets, which they're going to invest in all these money market funds. Those things are big money. If these institutions, they are the ones that own the world because they're the financial instruments, right? Financial institutions. Uh, they start testing tokenization, then everybody at the local level will start sooner or later testing it. It's a new technology. We're never supposed to be one or another. It's just that we're the upgrade or the update of something that has not been updated for years. So sooner or later, we're going to get more used to the use of tokenized versions. And I think that is going to make ripples because other companies will say, like, now I understand why tokenization happened. In just a couple of clicks, I get all the money from all these different people. It's more optimized, it's cleaner, it's leaner, whatever. So I think the opportunity arises from those big institutions jumping in, and the next class is all the private credits and small companies understanding that this is a new way, an alternative form of finance, but can add value to them. So I think this going to be this year itself. We're going to see big waves as to why tokenization is probably, after stable coins, the best use case there is in blockchain.
And do you think that if certain companies aren't staying up to date and utilizing tokenization and trying to kind of modernize some of their legacy infrastructure, that they have a possibility of just falling behind or not being able to be competitive in the future?
I strongly think so. Obviously, I'm biased, but I'm going to make a quick example. We have two
Yeah.
companies, one raising from three VCs, 1 million, and another company raising from one family office and 3,000 investors, and they're a B2C, right? And I don't care what it. They're like a really. I don't really care the concept. The B two the one doing from the legacy will have the VC, the institutional back, and the other one can still have the institutional back, but now has a lot of retail. You know who's the first user for their product or service? Their investors. So we have to start thinking that the retail not only invests, they're your first user, and that happens. Like if a VC invests in a company, they're opening doors in the back, right? They're like, oh, you should connect with this and everything because I'm the institution. I invested in the startup, and I believe that that's the case. But now imagine that wording times 2,000. So let's say that right now, for something that makes more sense, a restaurant, right? You got two big family offices invested in the restaurant. The restaurant still has to go promote, do everything. But now imagine that you open it for 10,000 people. You have 10,000 people that if they land on that place, they will go and eat at your place. So you already have 10,000 potential clients. So we have to understand the investor could be your first user, your first friend, your first salesman, your first. So this is why democratization works in many places because this is and Kickstarter. Kickstarter works because they sell you preemptively the product, and the excited person is the one invested. They receive the product and they're like, yes, I'm gonna Google review you. There's a lot of things that we don't foresee because startups tend to go for like the 2, 3 Silicon Valley VCs, which is great, but that money is becoming more expensive and more specialized. We have to start considering other funds which can still aid you in your process of complying with your vision, but they're also your friends. So I don't know, I'd rather have 2,000 friends than two big guys.
Yeah. And from your experience so far in working with different companies, what do you think is something that they tend to kind of get wrong and maybe they should avoid if they were thinking about potentially utilizing tokenization?
Yeah, it's the effort. Like technology makes it simple for you to capitalize, to convince, to communicate with your investor, but you still have to pursue the money, right? I mean, that's one of the things that I sometimes we struggle to communicate with our clients or potential clients, and it's like this is an eighth, but it's not your replacement. You still have to go and talk to potential investors. If they drop their data, you still have to send them an email. So this is kind of like a lot of automatization, but nothing beats the fact that you still have to make sure that they end up as an investor. No matter what we do, no matter how much I help you, you still have to be the voice of the project because people invest in people. So that's something that I believe that they believe that just with tokenization, like I said before, like people jump in, deploy the money, good to go, and you're like, oh, that was painless. No, raising capital, super painful. Without tech or with tech, we make it a little bit less painful, but still painful.
Yeah. Now, when it comes to some of the other emerging technologies, there's ZK that's obviously kind of buzzing right now. And if anyone's not living under a rock, they probably heard about the advancements with AI and really kind of how this is being integrated with blockchain. So, how do you see these newer technologies impacting tokenization, and really what are some of the just kind of capabilities that are just being not even thought about right now?
Yeah, I'm a big fan of CKs and AI. So you
Why
hit
so?
two of my, yeah. CKs, I think it's going to help a lot. When we deal with institutions, they don't like to use public ledgers. Uh, just building on the bill, a lot of people started dropping meme coins and all these chains, and the bill ledger, the wallet probably doesn't even know what it has. And so it's like, dude, we have an extra 5 million for people they're dropping, but we cannot have it because my compliance department is going to kill me if we
Yeah,
even try to use that. So CKs hides those transactions and wallets, which is nice because people also nowadays, like crypto space, sometimes it's a little bit weird, and people with big wallets, they don't like to send it because they're like, oh, they can see that it comes from this big wallet and I can get targeted. So CKs masquerades a little bit and protects. I wouldn't say hide, but nowadays too public, it's also a little bit dangerous, right? So I think CK is a great technology for tokenization and still being with the full exposure of the public chains, but with a little added of privacy and secrecy, which could be key in the future. So
yeah,
we're testing a lot with CKs and with AI. What can we say about AI that has not been said? That's a little ridiculous. Like everything just if we think tokenization can optimize, you embed an AI agent that becomes your economic advisor, or everything is like tokenization on steroids. Like we are testing in Brickken the deployment of AI agents for the help to our clients as to how they can tokenize, have a personal economic advisor who's a machine and perfect at numbers. Just imagine that your variables, you come in and say like, I'm going to raise 1 million. And then suddenly you're talking with them. It's like, your optimized level is to raise 800 because in the next 3 years, you're going to have this forecast. And it's like, you're right. Like,
yeah.
I'm not going to complain against that machine. You just got to talk. So I think everything that we do with AI is just awesome steroids.
Yeah, I can only imagine. Now there's even the quantum computing race, so
Oh,
we'll
please
leave
let's
that
not go
for
there.
another. Well, yeah, I don't even want to go down that rabbit hole
Like,
because we could talk a little bit about that for probably an hour. But you've definitely seen, I would say, tokenization across different sectors. I mean, there's so many different use cases. Healthcare. I mean, energy and things of that nature, and supply chain. So, what are you kind of thinking about a particular right unexpected application of tokenization that you haven't seen so far, something that's probably been the most surprising?
I would say, from a negative point of view, one of the most surprising, which I thought was going to penetrate faster and harder, was carbon credits. It
Yeah,
makes a lot
yeah,
of things for the sense that understanding if that is true and the emission gets compensated against that. I mean, there's a huge market. I thought that was going to be a big one. Energy markets, I thought it was another one, but there's a lot of regulation as to how you can sell your excess of energy. In some countries, it's very simple, in others, not. But again, traceability made a lot of sense. Uh, and to say that something that somebody has not thought of, or the next tokenization that is going to impact me, I think has to do with what we're building. I think there's going to be create. Okay, so this is very sci-fi like AI agents work. An AI agent comes from a company, so the company can deploy the man hour services of AI. And I think the AI true native payment is not euros because they don't work on the real outside world. So I think a lot of the crypto is the really what they should be paid in. It makes absolute sense. So I think the more AI works we're gonna do, I think their services are gonna be tokenized fully just because they're already created on not on chain. There's a lot of AIs now on chain, but they're already created from a technological native point of view. They don't exist in the real world. So that's everything that doesn't exist already in the real world and is fully or can be created fully online. Then tokenization makes it way more efficient. Because, for example, with that Picasso, you still need the outside curator, validator, appraisal of an expert verifying that the Picasso is real and it's all of this because it was created offline. And when you create something that is online since inception, you can review the code, you can establish what kind of work, everything that they do already. You can start verifying everything on chain with just one line of code. So I think all of these new layers are gonna allow us to tokenize, but not focus on the real world assets that we're calling, but focus itself on the new digital assets that are being created. So I think tokenization in the future is gonna be pure digital assets because we're already playing with those, and we created a system for that. We created a system for onboarding real world assets because we believe in the technological point of view they were more efficient. So imagine if that system is used for what it was created for digital assets itself. And digital assets, we can talk about everything, AI agents or whatever, but I think it's going to be quite entertaining in the future, let's say.
Yeah, just from some of the comments that are coming in here, one of the common themes is about profitability, right? So the BlackRocks of the world, I don't think that they're necessarily doing wanting to get involved with tokenization just for the kindness of their hearts, right? I mean, at the end of the day, these big companies, they want to save money, they want things to be more efficient, and they want to make profit. So from your experience, from the organization that you work for, and some of the research that you've done, what's like the numbers, like how much is this saving, how much quicker can tokenization make things, and like how much more is this going to impact the bottom line for companies that are small and big?
Yeah, I mean, there's different variables here. For example, at the headcount point of view, like we're
Mhm.
used to having a big financial department that can establish the reconciliation processes of obtaining the capital, send it back, a bunch of Excels. Yeah, we can optimize, but now with one button. So you reduce manpower for capitalization. Just imagine how crazy it would be that you receive 1 million from 10,000 investors and you have to send them back, let's say 10 euros per month as an earning. Do you see yourself going to your, I don't know, American bank and then giving them 10,000 transactions for 10 euros? They'll be like, the American bank will call you and it's like, what are you doing? Like this is weird. Like you will get all these calls. So that efficiency, you can only see it through the smart contracts and the optimization. So obviously manpower is a lot, but where there's a lot of reduction is in the payments, right? Let's not enter into off ramp and on ramp. But
Yeah,
if you were to send 1,000 euros from, again, let's call it, I don't know, like Mexico, again, I'm Mexican, to Spain, you will lose money on the Mexican peso to the euro, and then you will lose money from the euro through the Swiss system to the bank. And other people they're like, yeah, I didn't lose money. It's like, first of all, the bank sells you the euro at the most expensive position that day. They went and bought a lot, and then to sell you and make profit, they didn't. They're not selling you the euro at the amount they bought it because they mass bought the currency. They have a huge market in the back, so they sell you the euro super expensive, and then the SWIFT they're like bank transfer fees. Yeah, it's the SWIFT system. What are the bank transfer fees? You can lose up to 7%. So 1,000 euros if you were to receive, how much do you end up receiving? 950, 900, 850. I'm gonna tell a story because this is crazy, and I'm gonna deploy numbers. We have a provider in MENA region in Dubai, and it's our PR agency, and I love them. Great work. Shout out to them. Uh, they say like, hey, do you mind paying in dollars? And I was like, no, I have euros, and we're gonna lose a lot of money. Maybe you would like to pay in crypto. And they're like, no, no, we want dollars. And I was like, okay, here it goes. You know how much we lost? Okay, so first of all, we made the wrong transaction with the IBAN because I don't know what happened. The SWIFT, it was wrong, so it got sent to another
mm,
subsidiary of the bank, so they send it back. On that single transaction, we had already lost because we were transferring like 1,200. They sent us back the transaction. We lost another 3,000. We were at 1,500 loss just on the first wrong send. Then we
mm,
had to send it correctly. So we sent another 1,200 loss. So we ended up losing 2,700 to our agency just on a bank transfer. Yes, there was an error, But that error, they overcharged me again. And then on the second wood, when it was good, we ended up losing again because they were like, yeah, but you euros and they're dollars. So I'm going to sell you the dollars super
Mm,
expensive and they're going to go. Obviously, the ticket was high. But if we went to it, we lost, I think, 7, 8% on the transaction, which is a lot. So I told
yeah.
her, it's like, I feel bad. I'll make it up to you. But this is why maybe we would have used crypto. Your 8% would have been 0.1% because we no 0.0. If we would have used USDC in base, the fee would have been so ridiculous that we wouldn't even have noticed, and your money would have arrived. And there's a lot of misconceptions I said about off ramp and on ramp. Nowadays, there's agents and companies that they charge you 0.16% on the transfer or 0.20. It's still less than the 7% that sometimes with this bank transfer we lose. So tokenization, headcount, uh, bank transfers, investment, deployment banks. If we end up adding that, I mean, that's a lot of savings.
A lot of savings and speed as well too. Really, as someone that is shaping the future of this technology, what's one thing that you wish everyone, whether it be investors, businesses, governments, big think tanks, what's something that you really wish that they understood better about this technology, at least in its current state?
Yeah, I think testing, they should most people should stop writing about it, open a wallet, invest in a tokenized asset, and get on with it. I think that's we're at that stage because I've been educated since 2020. Like I became a really good professor and lecturer at colleges because I had to teach all my potential clients. So I'm done with that. Like I want to test. So I think we're at the age and position that technology is more solid. User experience, we're miles away from 2020. I mean, we already have abstraction wallets and whatnot. So I think the consideration is that people who invest should start testing the investment in tokenized assets just so they know it's the same as they will do it offline to a broker or through some other ones. I mean, this is the hybrid. We're at 2.5. We use investment opportunities off chain in an on-chain manner, and that's why it's weird. But I think a lot of people are more fearful when in reality some are great investments. We have clients who are providing 15% APY on a year debt for real estate or for other ones. 50% APY, it's amazing. Like I gotta say, like okay, we're just in crypto for crazy ludicrous opportunities, yeah, but also for losses. Passive income is something that needs to be taught since you have voice. It's a great manner to start saving money, generating new income. In yeah, is there risk? Yeah, everything is risky. We know that. But there are some solid investments out there that can generate enough passive income for us to generate more wealth. I mean, we don't have to gamble into some cryptocurrencies. We can go in real estate or we can go in all of these other things. And I think passive income is overlooked. And I'm a fan of passive income.
Yeah. And with kind of really all the advances that are going on with tokenization and blockchain and the overall adoption, what's one of the biggest challenges that you faced with kind of staying ahead of the curve? This industry, it moves at a million miles a second. How are you personally just staying up to speed with all of this? And how do you really ensure that your organization is also ahead of the trends and continuing to be innovative?
Yeah, so I'm gonna give a high five to the whole team because I think we're thriving just based on the fact that we have a great culture and we have a solid team, and we're having fun. A lot of things are overlooked as to how that radically changes a company. Because
Yeah.
I've been in some companies where it was a pain going to work, and it's like, oh my god, I just want the weekend to happen. So how do you stay against the curve? Obviously, is they will say like, oh, with money or the great technology. We have people who we hire who have no clue about blockchain, and it's fine. We don't care. We just want a great fit that has to fit or know-how expertise. It doesn't have to be a genius. We can make the best out of somebody. We just want somebody who wants to thrive in the sector.
Yeah.
Sometimes people forget that the one thing and the excitement can kill a genius, because the genius will be sitting back and it's like, no, but this is the way to do it. And maybe your way doesn't match what we're trying to build for years, because we come from years of experience and all of that. So the genius could possibly disrupt the whole company just based on his huge expertise and modeling and everything. So for me, it's not that we hire smart people. Not saying anything related to that. I'm just saying that excitement, it's a key denominator for what we're building. So I love people who excite me. Like when we go to the office, we love to get excited. And that's why we generate new great ideas, because culture matters and it's crucial. Like I believe that the sole denominator key for any company to thrive, it's its culture and team. Money, money comes afterwards. If you build all of that, your product is solid, your brand is solid, you can request money. If at the beginning you don't have that, I don't know, it must be hard.
It's gonna be tough, yeah. And fostering that great culture. I mean, is there anything else that you can share about the team in the terms of the ways that you operate? I know that we're coming up on time here, so I want to make sure that people in the audience just know a little bit more about the things that are going on internally. So, where are you at right now with respect to your roadmap? I know that you guys have recently got some funding as well too, so maybe you can talk a little bit about that. And then closing it out, how can people stay aware of all the great things that you're doing, and how can they potentially collaborate or just stay in tune with what you got going on?
Yeah. So yeah, we raised capital. So we're at that point where we already have a product that got validated and clients. So we survived that kind of desert. Especially in blockchain, it's very hard. Uh, and it allows us to scale. We're scaling marketing and sales. Last year, I always said it internally, the most important department last year was tech. We needed to create a solid product because this technology, it's hard. There's so many variables and
Yeah,
so many different bios to do it.
yeah,
And this year is it's marketing and sales. We have to scale, so we started hiring a lot of. We hired 3 positions in marketing, 2 in sales, and now we're gonna go for tech, just reinforcement, and we're very happy. We upgraded our headcount to 31, and I think next 2 weeks we're gonna be 33. So we are very heavy for a crypto company. There are a lot of people who's like, yeah, but Uniswap has 12. It's a protocol. It's a different thing. I'm a B2B. It's insane a B2B in crypto. You have no clue what is that. So I
yeah.
think we have the right team, and obviously we're still hiring. So if you guys wanna add me up and drop me a CV, I would love to receive those and shoot it out to our head of people, and hopefully, yeah, you never know. And regarding anything else, tokenization, partners, if you wanna know more, again, just add me up, send me a message, and then we'll see where synergies happen, because this is all about building.
Yeah. And just from, hiring and things like that, are there any, I mean, we can talk a lot about the characteristics and qualities that you look for in people, but are there any like red flags to you or things that would just be a hard no for you that you really wouldn't be able to, accept when it comes to someone that was looking to join your team?
Yeah, I don't like people when they get corrected, they don't accept the advice.
Mm,
It's I'm very crucial there. I think even though you're the best at the best, you can still keep learning from others, and you might stumble into somebody who's like, oh, that guy has no clue, and then maybe they have an idea that can, in your super creative mind, click something. You always have to be open. So I really don't like people who, like, this is a person that is like, I hate people. No, I don't like people who think they're know-it-alls. I mean, this is not. I think so for us in Brickken, we do a lot of workshops and we keep on understanding. And I give a lot of report to people. And it's like, I have a stupid question, and it's like I always say, there's not a stupid question. There's a stupid person not asking a question. So
mm.
that's my motto in life.
I like that. I like that a lot. So closing it out, really excited. In terms of events that are coming up, are you guys going to be doing anything in the near future? And like closing out as well too. So you are based in Barcelona. There may be some people in the audience here. What are some exciting things that you're just kind of doing locally? And is there anything that people in that area can look out for?
Yeah, we're in Spain. We're trying to collaborate with some more people to create more meetups. Blockchain a couple of years ago was thriving. Obviously, in 2021, there was a lot of different companies. Nowadays, we're a few, so we're trying to get examined around it. I think it's also important that human communication as to, hey, we're building this. What are you guys doing? So we're starting to reignite that hope because in Spain we're quite a few, and as a company, yeah, we're gonna go to the major events. We're already setting up shop for Token 2049 to talk with the industry
Yeah.
leaders and understand what everybody's building. So expect us to be always at the major events of blockchain because those are crazy. You come here, you come like 1 week of like, oh, what just happened? Like there's so much input, but that's great. There's a lot of noise, but below that noise, we always come with some great ideas, and it's like, this is very interesting.
Yeah, there is a lot of noise in the industry, but having that keen ear is what separates the average from the great, for sure. Well, thank you for sharing all of your wonderful insights here, Edwin. The last thing is looking back at your time and someone that successfully transferred into this industry. What's one piece of advice or maybe some words of wisdom that you can share with people that are maybe on the fence or maybe even potentially thinking about making a transition into working into blockchain, crypto, and Web3?
Yeah. So this is a hard one because I think no matter I don't know how to express this, but I will say like the noise is too powerful in crypto, right? The echo chambers of the people inside talking about the outsiders and the outsiders looking into the crypto. It's very weird. It's very weird. I don't know how to transmit that until you feel it. But I would say like if the most important thing is if you start building in Web3, always keep a bridge with all different sectors because too
Mm,
deep into Web3, we know what happens. Like people build for Web3 people, and it's like I have a protocol with liquid staking, relaying, and it's like I have no clue what just happened, and I've been here 7 years. So that's a mistake.
yeah.
And from outside, not fully understanding crypto. So I have a companies who even deploy tokens and they failed just because they didn't understand the community, the
Mm,
Twitter. Like it's very hard, but you have to really nurture both spaces. Like I think that's a key in crypto, and that's why companies tend to succeed because they know how to move or sway between different ecosystem. Because one ecosystem and the other it's there's no relation. It's absolutely insane.
yeah, yeah. Well, this has been a fantastic conversation. It's been some time coming, and I'm so glad that we got to do this today,
Thank you,
Edwin. And
Trevor.
because it is later in the evening where you are at, I'm going to let you get to rest. You've had a long day, but really looking forward to getting this conversation up on our socials, and the full video will be up on YouTube as well too. So thank everyone for joining. I know that you could be doing a million things in the world, but you chose to be here today for this incredible conversation. I appreciate all of you, and I appreciate you, Edwin. Have a great
Thank
one.
you very
Take care,
much.
everyone.
It's been a
Bye.
great one. Thank you very much.